the January, February trade data are kind of notoriously difficult to dissect, partly because of the Chinese New Year distortions. And of course, this year, you also have the 10% tariff that were presumably already showing up its effect in terms of the data, but I guess not yet the second batch of 10% that probably just went through into effect last few days. So I guess that's also reportedly caused some dislocations as well already. So I think this will be, this will be difficult to really kind of summarize as a very clean trend. We'll probably need to see the next few months of data to get a clear sense of where things are going. Now, our sense is that, look, the export, outlook is going to be very clouded this year because we can't forecast tariff actions with any type of precision, both in terms of timing or how is it going to go ahead in terms of implementation. But broadly, we can say that there are a lot of risks on the horizon when it comes to the export sector. So, to your point, what that means is that, from a domestic growth perspective, that just becomes much more important in terms of the overall macro outlook. And that's why I think we are looking for not only the import data per se, but the domestic economy data in terms of consumptions, in terms of private sector investment, in terms of business sentiment, and all of that, to look for signs that all of that could be bottoming out at some point this year. And the recent policy announcement seems to suggest that there will be more policy support on this front. So we'll be looking for signs of domestic demand stabilization, which is our base case this year. But the tariff and export outlook, I think, is going to be extremely difficult to forecast.
Right. Julia, I'm reading a note. This is out from Dow Jones, where Citi analyst economists are actually raising China's 2025 economic growth forecast to 4.7% from 4.2% expected earlier. This, I think, has been a review that they've done after the NPC, I would imagine, in the two sessions outlook that was offered by Beijing. They believe that 2025 could be a turning year for the Chinese economy because of, obviously, a lot of investment going into new tech, deep-sea humanoids as notable breakthroughs, and growth drivers gaining traction domestically as well, and through momentum coming in through channels like import substitution and supply-side reforms. Do you think all of this can really help the Chinese economy at this stage, that a bit of stabilization on the export front, even if it's not coming from the U.S., could boost the economy?
So the way we view this is that, look, China's had the same type of, China's had very supportive policies for technology development for some years now. And has even been investing quite heavily in AI. But I think up until DeepSeek a couple of weeks ago, this always seemed like a far off 10, 15-year type of horizon type of issue or a boost. But now DeepSeek, with the rapid coming down of the cost of LLM models, and which means that much greater application opportunities, that just brings it forward. So to your point, I think it does have some positive incremental boost to private sector investment. If you think about the overall Chinese economy, the digital economy is about 30% of GDP now. It's bigger than the property sector plus construction sector. So with AI, the next breakthrough in AI, with the DeepSeek coming down in terms of cost, what that means is that this part of the economy, this 30% that's more digitalized, be it manufacturing or services, online or cloud, all of that could actually see faster pace of growth, which could be, I think, a bit of an offset to what's going on in the export sector and help to neutralize some of the continued drag on the property side. So I do think that there's more positive stabilization coming from this front. But I do think that it's equally important that the government continues to support private consumption through its various schemes, because after all, technology from the inception, the modeling to application to consumers takes time. So the government really needs to play, fiscal policy needs to play the bridging role to support demand until those products comes to the market and until consumers can actually buy them. So I do think that this will continue to be very important, this government policy support continue to be very important for our outlook for this year. So on that, I think it's still that the overall consumption picture is still quite weak, as you can see from the import. So it's nowhere near like a rapid acceleration is in front of us. I think it's going to be a gradual bottoming out process.
And of course, it's